Vice Chairman and Managing Director of Triveni Engineering, joins us now to talk about that. Tarun, I'll come to this export quota in a bit, but first, on your sugar segment, the profitability has been dragged down considerably. Can you tell us what is the expectation? Are you sitting on any high-cost inventory at the moment? And the losses in the sugar business stand at somewhere around 25 odd crores. What's the expectation?
Well, in the quarter under review, when we compare it to the previous quarter, the real difference is that in the previous corresponding quarter, we had some profitability that came from exports. And in this particular quarter too, we had no export revenue at that particular point. In addition, we sold some fairly expensive sugar that had been produced at a slightly higher cost of production, which resulted in some losses for the sugar segment. However, the business as a whole, of course, did rather well with the ethanol segment and the engineering segments contributing profitably towards the results. Going forward, I think this scenario is going to change considerably for a couple of reasons. The first one, of course, and I'll wait for your question on exports, I think that's a game changer as far as the future is concerned. In addition, I think the monsoons have been very kind, and the kind of productivity levels that we're seeing as we embark on a new sugar season is actually very positive. Thereby, my contention is that cost of production will be lower this year compared to last year, and that will, of course, assist in delivering better quality results.
Okay. We'll get to exports in just a bit, but you said the distillery business has done well, but margins there have also fallen almost 600 basis points, haven't they, Tarun?
Correct. It's done well from two perspectives. Number one, in terms of new capacity coming online. So the speed at which we have been able to touch 100% production across our 4 plants, that's actually been very encouraging. In addition, we had expanded our capacity to 660 kiloliters per day. That was done with a very short time in terms of commercializing that production. So again, that is a win for us. However, given the fact that our transfer price of molasses, which is the feedstock, had risen year on year, it did impact margins. This effectively changes the profitability quotient from the sugar sector to the molasses sector and vice versa. I think we have a realistic cost of production now. We have a realistic transfer price, which is pretty much common across the industry. And that's going to give us very substantially stable margins. I would like to point out that in previous years, because we had lower molasses prices, we had supernormal profitability in the distillery segment. And now, as we have fairly rationalized transfer prices, we're going to have very positive and still extremely good levels of profitability within the Triveni's business segment, Triveni's distillery segment. And this is a comment for the industry as well.
Okay, all right. Hi, Tarun. Morning. The distillery business ramping up from the 660 KLPD is going to be the big trigger, and you're going to be nearly doubling it. So give us a sense about the timelines of this doubling. And, this will be the re-rating event, actually. What is the targeted contribution coming in from this segment? Sugar is going to be volatile, but this is where the street is betting on.
So I don't think sugar is going to be volatile. I think sugar is going to be fairly stable. But the distillery segment, and thank you for asking that question, where the board in its previous board meeting had approved an additional expansion of another 450 KLPD, thereby expanding Triveni's distillery capacity from 660 KLPD, that's kiloliters per day, to 1,110 kiloliters per day. We're anticipating that both distilleries will come online in fiscal 24. It will be between the 3rd and 4th quarter. So let's say a year to 15 months out is when we're anticipating these new plants to come in. The only other point I'd like to mention is that these plants will be dual feed plants. So we won't be tied in just to molasses or sugarcane juice as our feedstock. We will have the capability, as we already do at one of our plants, to utilize grain. And now with the national biofuel policy, I think the trend will be more and more in terms of investing into dual feed that gives you great optionality. And you can then only look at the bottom line in terms of making the decision of what is the raw material that you're going to be using to produce ethanol. In terms of contribution going forward, I see very healthy increases in terms of those levels as this great optionality comes in. You will have also,
Got that. Tarun, I'm afraid we have run out of time, but thank you so much for your thoughts. I guess we got what we needed from this interview. Thanks a lot for joining in, and all the best for the quarters to come.